Hey there, hope you're having an excellent day. First off, I owe you an apology. I didn't give you an update last week. I was with one of our biggest lending partners at a Realtor and Loan Officer mastermind class. It was an amazing time. I was surrounded by some of the best producers in both real estate and mortgages in the business. There was knowledge shared, collaboration was excellent, and it really reminded me how powerful it is when we sharpen each other. If you ever want to join me at one of these events, flights and our hotels are covered, so please reach out. Now, let's get into today's update. I held off until after yesterday's Fed announcement so that we could cover rate cut and everything happening around it. Well, I'm sure you heard, but the Fed cut rates by 25 basis points yesterday. That brings the Fed funds range down to 4 to 4.25%. Now, some people are scratching their heads asking why mortgage rates actually moved higher right after that announcement. Here's the thing. Markets are forward looking. Mortgage rates, they've already priced in the expected cut weeks ago. Yesterday was more of a sell the news moment. And we also had a surprisingly low initial jobless claims report that pressured the bond market further. The Fed also made it clear that there's no risk-free path ahead. They're acknowledging uncertainty, balancing slowing labor market data with still sticky inflation. Their latest projection suggests 2 more cuts are possible before year-end, but the Fed is clearly divided. Some members want no more cuts, while others are pushing for deeper ones. Now, let's connect this to housing. Cancellations are on the rise. In July, 15.3% of all home purchase agreements fell through. That's 58,000 deals canceled. It's the highest July cancellation rate on record. Buyers are starting to get a little bit of cold feet, not just because of affordability, but also due to uncertainty in the economy and the labor market. As one broker put it, buyers are having economic nausea. Refinance demand is surging though. With rates dipping into the mid-sixes, refinance applications jumped 58% last week and are now up 70% compared to last year. The refi share of mortgage activity is nearly 60% of the market. That's the highest level in years. Builder confidence is holding steady, but expectations for future sales are rising. With mortgage rates averaging 6.35% and incentives at post-COVID highs, builders see better demand ahead. Their future sales outlook just took a 6-month high. But foreclosure activity is also creeping higher. August marked the 6th straight month of increases, with filings up 18% year over year. States like Nevada, South Carolina, and Florida are leading the pack, with Las Vegas topping metros at 1 foreclosure for every 1,800 homes. And don't miss this legal case. A federal judge is now allowing a DOJ and HUD lawsuit against Rocket Mortgage over appraisal bias to move forward. This will be closely watched across the industry, as it could have a ripple effect on how lenders and appraisers handle valuation disputes. So what does this all mean to you if you're a buyer, a seller, or a realtor? Buyers. Yes, affordability is still tight, but with cancellations climbing and builders offering incentives, negotiation powers, they're shifting in your favor. Homeowners. If you haven't checked whether a refinance makes sense, now's the time. Rates are still volatile, but trending lower overall. And realtors, your buyers are nervous. If you can educate them and set expectations clearly though, you're going to be their hero. So to wrap this up, remember, I'm going to keep breaking these updates down for you every single week, typically on Wednesdays. And if you ever want to attend a mastermind like the one I was at last week, where we connect top realtors and loan officers, please let me know. It's an incredible opportunity, and yes, flights and hotel are covered. Well, that's today's market update. I'll see you in the next one.